Alex, we are live. We are live. We are live now. And yesterday we made a trade and it wasn't profitable. And it's interesting what to do if we already bought black swans for a week and options, for example, for 1 day are too cheap, that you understand that if you will sell them, then it is big probability that they will give loss. And I have an answer. So we can make, if we are almost sure that daily options will give loss, but we can make limit orders which are higher than current prices in the market. And if market will make some volatility, but not big enough for our black swans to be executed, our daily options, selling of our daily options, they can bring us profit. Understand what I mean, yes?
No.
So, for example, can you open TradingView chat for a moment?
So since we're in the loss, that improbable event happened yesterday. So we dropped somewhere in the middle of red zone.
Yes,
And how
really
deep we were?
not too close to the biggest losing point, but I think about maybe $14 further than the point where we still were in profit. Can you please open TradingView chat? I want to show you what I mean. So look, can you please open 1 hour chat? So smaller scale. Yes, and what I wanted to say, that on Sunday we sold options that the market will not go further than 1890 and I think about 1860. So this small corridor. And we hedged it with 1925 and also 1825. And what we can do, we could buy options hedge at once and put limit orders for selling, for example, 1875 option for call for $25, for example. And if it will be executed, then it was almost the same as we sold the whole straddle for $25. And today we will do something like this. So we will buy at first some hedging options. And we will try to find good limit orders for selling options to take some profit if the market will make some movement like this. But at last it will stop here, for example. So what I mean? I mean that yesterday we can choose another option. I mean not selling central straddle for $15, but just put limit orders for selling this option, call for $25, and that option put for also $25. And and even in this case, we had loss today, but it will be about $6-7 less. Understand? But this is, I think, a good decision for trading volatility. And I think we again saw if previously we were making forecasts for some option position, now I give an idea to make forecasts to understand where we can put limit orders for selling options, for example. and to understand what we can do to reduce still our black swan position. Because black swan strategy is rather stupid strategy. I mean, it's difficult to keep. I mean, to buy each week black swan, it's difficult. It's difficult from the point of psychology, because you lose money, lose money, lose money, and in the end you think, what I'm doing. But when you are selling options, it's a strategy which require more intellect, analysis, and some thinking. So we still have these options. We still have on Friday 1950 and
So
1800.
so it is more interesting and more entertainment for the brain to lose money.
Uh, Black Swan strategy has positive expectance if you take long term. To make positive expectance when you sell options, from my point of view, is really more difficult, especially in daily options. Maybe in weekly it's easier, or maybe monthly, but in daily, the premium which you get from selling daily options is rather small, and fees and spread is high. So selling daily options is one of the most difficult strategies. But if you found how to do this, then you really can consistently make money, because selling options has a win rate more than 50%. And usually selling strategy has chart, not like ladder. So usually it's slowly going up, and sometimes make ladder down. And when you are trading black swan strategies, it's making slow downwards movement and sometimes big ladder up. So in our black swan strategy, we are now waiting for up ladder, and now we need to do something with the selling strategy. So my idea is to create forecast for one more day till
Yeah,
tomorrow.
bad idea.
And to do this strategy from selling point of view. So try to find which options we can sell today, how hedge them, and how we can earn something from this. So can you please move this green line a little bit in the right side, so to the next expiration? And let's think what we can do for tomorrow. Let's try today to do traditional way. I'll try to explain, for example, technical analysis view. Can you open a daily chart? And make, yes, thank you. So usually when I see like this, when moving averages are moving downwards, then they make intersection. And after they both look up, this and this, and the market is crossing them from downside to upside, and then slowly make consolidation and stops on the average. Really often, from my experience, I saw like market make a strong upward movement from this. We can see something what I mean. For example, here there was at first breakout downside, then market tried from the lowest point to go up. It stopped on the moving averages and then went down. Also, you can also see like this. So here was intersection. Then after, market tried here to break them down, and it was small upward trend. And you can see that in this point and in this point, moving averages were like resistance. Understand? Like support. Sorry, support level.
Okay.
This is what I can see from daily chart. Also, if, for example, here it will be strong movement downside, then often it it can happen like this. So going here, then here, and then going downwards. Sorry, I think something is happening with my mic. Do you hear me now?
Yes.
Okay. Okay. And now please open smaller scale, like hourly maybe. And here we can see that we are in a range. So what we can do? I think we can sell some options. For example, if the market will go down, for example, here, and make credit put spread. So, I mean, something like this. And if it will go up, we can also put some selling order if we will have good price, for example, to sell 1900 options. So my idea is to try to sell central options for more money than it is trading now. Understand?
Got
Okay.
it.
Let's open our position builder. At first, let's check current price. So what is the current price for central straddle? So we can see that it $13,
Some.
about $20, yes. So it's $13 for put and $7 for call. So I think that we can try to sell option put. We can put limit order for this, for example, for I think about 20. Let's make it $30. $30. Sell. Let's do it again 0.5 because I think one option is a lot. So 0.5 for $30. 29.9. Yes, you can make 29.9, but we can make it in our terminal when we will put orders. Yes. And also the same for 1900 option call. Also $30. And you know, this we can sell more. Why? Because it is closer to our weekly position. Understand? So we have 1950 option call in weekly position. And if we will sell 1900 daily option call for $30, it will be only $20 left to our point where we will get profit. Understand? So for option put, it will be still $70. So for option put, we don't have such a good risk profile. So I think we can sell, for example, I think 0.8 for call option. I mean quantity.
There is a bug. Okay.
0.5 put options for $30 and 0.8 call option for also $30. And just close them with equal hedging position. So, for example, 18, I think 1850, we can buy 1850 0.5 now. And the same we can do for 1950. Yes, 1950 also. 0.8. Yeah, there is not equal. Okay. But you remember that we will buy 0.8 option call and 0.5 option put. So different size.
Yeah, okay. Still, it's buggy because entry price is updating on update of the
Yes, that is why
order
it
book.
is. Yeah, that is why it is showing big loss here. But
Yeah, it
really,
should
if
be
we
less.
will,
Yes. Mhm.
if we manage to sell for the price I told, it will not be like this. It will be really different. Maybe even, no, I don't think that it will be profitable, but it will be much better. Okay, so let me start with recording. So, Alex, I think that today I'm ready to risk. Please show me how much is here. How
No,
much
it's
is
too much.
in
No,
this
it's too
point?
much. This should be less because those short positions should be sold for much more.
So I'm
So
ready to
now it's
risk
not
about
represented.
$5 if the market will get out of our range. And I think that range can be from 1870 to 1930. So I think that today I'm ready to sell uh, a little bit asymmetric butterfly. And also I know that we have bought black swans for 1 week. I mean 1950 and 1800. So I'm not afraid if the market will make a strong movement because in that way we will earn money on other options.
Okay, let's go to the position builder.
Sure.
To our trading terminal, not position builder. So what we do is that we sell central strike of 1900.
Yes, we put limit orders. But we can do as usual to begin with buying hedging options and after put selling orders.
Yes, that would be better. And so hedging start from 1950 option call.
And also, I want to say today that the strategy we are trying to do now is like Tony Saliba strategy. It's one of Market Wizards who gave interview for the first Market Wizards book, and he was selling butterflies and also using some profit from his butterflies to buy black swans for longer term options. And now we are doing a little bit opposite. So we already have black swans for longer term options weekly and trying to compensate the money we spent with daily butterflies. So I think this is really interesting strategy because if it will be good, if it is good, then we will compensate money and we can make a small profit in low volatile months and a good profit when it will be black, when it is black swans. Okay, let's buy our options.
And you said about a symmetric butterfly. So what are legs of our hedging position?
0.8 is for call options. I mean, and 0.5 for put options.
Please check. Correct? 0.8 for call option. Okay. And 0.5 for put option.
Yes,
check.
Exactly. Nice.
So then selling central strike, which is 19 option put for 0.5, right? No, sell. Wait one. Sell 19. Where's the position? 1950. So yeah, 0.5, correct? Please double check. Selling 0.5.
Correct.
Not correct, because we need.
Stop.
We don't need market price.
Yes, we need limit
Like,
price.
Like
Yes, we need
29.9.
29.9. Sure.
Yeah, correct?
Correct. Now correct.
And selling 1900 option call 0.8 for
Same price. Yes, 29.9.
And please check 0.8.
Yes, good.
Boom. Okay. Filter then tomorrow. Yes, correct. Correct. 1900. Yeah. Seems like that's it.
Yes, sure. And I want to explain idea one more time. So we are waiting that in daily it will be more often stay and not moving anywhere, and we can take premium from options. And idea is to invest this premium in bigger black swans like weekly. And if we will make more money for selling daily butterflies, then we will have two profitable strategies. And one day I want smart statistics. I want to have smart statistics for our trades. So we can later make a difference between our daily trades and weekly trades, for example. Because now we still don't have any like features. So if I had features, I would make feature that, for example, this I put feature daily trading, daily short volatility. So here we're trying to sell volatility. And on black swans, I want to make feature long volatility. So when we have, for example, half a year of trading, we can take two strategies and check which one is giving us good profits, or which one we need to just change or upgrade or do something, or maybe just not to use it. Understand? Okay, so hope we will do this for our statistics. Okay, Alex, I think that one of our orders will be executed because at least $30 usually Ethereum is going up or down. And tomorrow we will check results of our trading. So, do you want to discuss something else?
No.
Okay,
No.
then see you tomorrow, and hope that soon we will see some volatility in Ethereum because otherwise this market is really not interesting. Thank you, Alex. Bye.
Thanks, Roma. Bye and see you tomorrow.